Many thanks for joining us on this fresh edition of Business Week, the program that brings you top business stories that made the headlines during the course of this week, including special news features, market data, interviews, and much more. Welcome to the show. Well, here's the biggest stories we tracked for you over the course of this week. Now, on the local front, a total of 116.46 million litres of petrol valued at 18.8 billion naira was stolen last year, and that's according to the latest data from the NNPC. And still staying with the energy sector now, marketers of liquefied petroleum gas, that's popularly known as cooking gas, have also decried the weekly increment in the cost of LPG across the country. The group, under the aegis of the Liquefied Petroleum Gas Retailers Branch of Nigeria, under the Union of Petroleum and Natural Gas Workers, has also blamed the rising cost due to the falling nature of the naira against the US dollar and the rise in global crude oil prices. And away from energy now, the federal government's total borrowing from the Central Bank of Nigeria through Ways and Means advances has risen by 96.54%, amounting to 8.92 trillion naira in just 2 years. Shifting focus now to the international front, the United States Senate, in a fresh move, has again approved a bill to provide $52 billion in US subsidies for semiconductor chips manufacturing in a bid to reach a compromise after months of discussions. And looking at the cryptocurrency market performance, at the start of this week, Bitcoin surged 4.41% to hit $46,499.29 on Sunday, adding $1,963.64 to its previous close. And Ether, the coin that's linked to Ethereum blockchain network, also surged by 3.92% to hit $3,270.67. And now, more Chinese companies are halting domestic listing plan filing show as the country's biggest coronavirus outbreak in 2 years hampers due to diligence and information gathering, affecting an estimate of about $9 billion plus in fundraising. Well, it's about that time where we now bring you special packages prepared by our correspondent.
662 cartons of wine.
A breakdown of the seizures show that more than 6,700 bags of 50 kg foreign parboiled rice, an equivalent of 11 trailer load, continue to feature regularly among impounded contraband goods. Others include about 70,000 liters of premium motor spirit, hundreds of packs of compressed cannabis sativa, second-hand clothes, used tires, unregistered medicaments and vehicles, among others, that were intercepted at different locations across the zone.
This is cannabis sativa with a duty-paid value of 164,480 naira. The cannabis sativa intercepted from different flashpoints within Southwest Zone. Some from Idiroko, some along Lagos-Ibadan Expressway, some at Ogiri.
The successful interception of the contraband items, however, often comes at a painful cost. According to Comptroller Ejibono, the recurring attacks against customs operatives in the course of battling smugglers have become worrisome and may necessitate deployment of the rules of engagement.
I have given my officers the directive to make sure that they maim whoever. I don't want them to come back with their... How can an officer be carrying AK-47 with double magazine? Somebody with cutlass will come and machete one and all of them will run away? No, we are not going to take that again. As a matter of fact, I have instructed that they should fire them from kneecap below. Maim. I'm not saying they should kill them. They should be maimed. When they are maimed, then we will look for their co-conspirators or the sponsor. Because most of these boys, there are people backing them. So we need their sponsors and co-collaborators.
He, however, notes that nothing will dampen the tempo of economic protection and prevention of dangerous goods from entering the country through any entry point in the southwest.
Nigeria's second national tax dialogue with the theme Tax Harmonization for Enhanced Revenue Generation. The president is part of this meeting, and he believes the dialogue would allow for greater synergy in the country's tax administration at all levels of government. He feels harmonizing taxpayer identification is a step in the right direction, but more should be done in making tax compliance easier through an even greater ease of doing business in the country.
The National Tax Dialogue is a useful tool for navigating our path towards a stable and sustainable domestic revenue mobilization. The government must succeed at securing a buoyant domestic revenue base for the country.
The FIRS chairman highlights the significant role tax income plays in helping the country meet revenue targets. He wants the tax system better supported for greater efficiency and improved revenue generation for the country, while seeking that taxation issues should not be politicized.
Unfettered integration of the data processing systems and databases of government agencies with that of Federal Inland Revenue Service for improved tax administration. Foundation for improved data sharing and exchange of tax information among tax authorities.
Smaller economies than Nigeria get more revenue from taxation because their tax systems are better streamlined. The participants now share thoughts on harmonizing the different fragments of the country's tax system into one for the purpose of enhanced collection.
It is up to all of us to rework the national economy in a way that guarantees improved productivity, sustained growth, and prosperity for the good of the population.
Every nation that will continue to be in existence will have the taxing power very well structured, very well harmonized, and very well put in place.
Highest paying and most consistent taxpayers were also recognized at the National Tax Dialogue as a means of encouraging a tax payment culture amongst Nigerians.
Well, it's now time to bring you the feature on the show today as we take a look at the performance of the capital market on the global and domestic front, looking at the intricacies that played out in the first quarter of this year amid the impact of the Russia-Ukraine crisis. Don't go anywhere. Thank you so much for staying with us. Let's now deal with the crux of today's discourse. Russia's invasion of Ukraine has rattled global financial and energy markets, causing oil prices to spike and financial instruments to fall. Now, amid the rise in tension, the Nigerian capital market went up marginally by 0.1% in February's trading performance, but experts say it was not an indication that Nigeria will not share the negative repercussion of the Ukraine attack. Now, meanwhile, global markets have already closely watching and following high-profile meetings like the likes we've had in Brussels, with regional investors also keeping a close eye on developments in Ukraine and key meetings of NATO, EU and G7 leaders amid other peace talk attempts. Well, joining me now to bring some light on the impact of all of this on the capital market, I have Mukhtar Mohammed, the Chief Executive Officer of Finance with Mukhtar. Thank you very much for joining us on the show today, Mukhtar.
My pleasure, David.
Let's now start the conversation with the impact of the Russia-Ukraine crisis on the capital market, raising market volatility, adding to the inflationary pressures by disrupting exports of oil, natural gas, and even wheat from Russia and Ukraine. The interplay in the commodities market has also been one closely watched. Let's have your thoughts on the plunge, the rebound, and the seesaw pattern so far from the beginning of the crisis to the response that we've seen so far to peace talks, and what you think would be the interplay in the coming days if this crisis escalates further beyond all these peace talks.
We are not going to see, we can't barely see when this will end, but where in the economic cycle, there's always an end period and there's also the beginning of a new cycle. We could be both. When you start the negative cycle in economics term, you have to wait very soon you get a positive cycle. But like you said, you started from the pandemic. We went through the pandemic. The capital market also went through the pandemic, and today we saw a little bit of rebound. Then we saw how the capital market was able to deal with inflation. Then later on, here we are again struggling with the Russian-Ukraine crisis. But like I said, in the Russian-Ukraine crisis, mostly those that will be affected are virtually those the oil and gas sector and also the commodity market, like you explained. And this commodity market are not going to be affected directly. They're going to be affected because of equities, companies that are listed in the commodity market, and most of them are the companies. And because most of them get some of their product from outside the shore of this country, especially those that are involved in wheat production, like flour mill, Dangote flour. And then all of them will be affected in the oil and gas sector because almost everybody, all companies that are listed in the exchange has to pay for diesel, and diesel these days has gone over almost 200% price increment. So, and that will affect the cost of operation, and by affect their bottom line. So we've seen that is a major impact because it's not going to be one sector or the other sectors, and we've seen that already playing out in some banks, in some industry, making sure that they close on time. They normally close on time now compared to before. Some of them are giving notice to customers that once it's 4 o'clock, we shut down for the day because of power situation. So those are major. Then for the equity in the oil and gas sectors, definitely they are supposed to benefit from the high in price of this commodity. Most of those the marketing, most of the companies that listed the marketing, and because exception for Wando and Seplat that have all their subsidiary listed in the exchange, most of them most of the company like Total, Corn Oil just have their subsidiary listed. And so what we see there is that those subsidiaries are supposed to benefit from the PIB bill and the petroleum industry bill, and at the end of the day, that bill they have not seen the light of the day. And also, it's only NNPC at the moment that is the importer of crude petroleum product to Nigeria. So that again is a major challenge also, and so they have to get from NNPC, and then we have the bas fuel that came into the country also. So all this is going to affect their bottom line. And for Seplat, you could see that there was a little bit of positivity because of the increase in price of crude that we saw moved up that high, because they are not involved in refined petroleum products. They're only involved in exportation of crude oil. So we saw that play up in their price. But one, though we've seen the challenges that they've been going through all the years, so we've not been able to see a reflection, and even their results for even 2020, 2021, even 2019 has not been released. So you cannot see, we don't know what those impacts in terms of the numbers will be. So will the market recover? Definitely, like I said, the economy is like a cycle. It's like the life of a man. You go through the cycles, and after there will be a gradual recovery. But the impact again is high. Again, when you look at the inflationary pressure on the companies also that are listed, and like I said, cost of operation will go up, and the earning capability of Nigerians have gone up, and so many industries will be suffering, especially in the area of patronage. You are going to see less patronage because most Nigerians may not be able to afford some of those goods, and they will begin to look for cheaper means. So it's a situation that's going to affect every sphere of our economy, every life of a Nigeria, because like I said, fortunately or unfortunately, the world has become a global business. What happened to one affect the other.
Okay, now, in the midst of all of these, now, what havens do you think remain most preferable? And despite the geopolitical risks, US, UK, and even African investors should not lose sight of the long-term opportunities that international stocks may offer. Wouldn't you say? Investors still have to keep their eyes on the prize.
Well, like you said, in the long term, especially if they were able to hold on for the long term, that's a major challenge. It's not like if they will not be able, holding on for the long term is a challenge. And again, when you look at cost of fund in Africa is very, very high. And Africa, we're involved in short-term borrowing. And so it's going to be very, very tough for us, mostly African investors, to play the international market. Even the international investors also are weary of companies and that get majority of their profit from that region, also especially from Russia. You can see a lot of companies have closed down their operation in Russia. So that, again, no matter how small, is going to affect their bottom line. But you could see some companies also benefit from this. from the Russian-Ukraine crisis, especially if you're an international player. Then you begin to look at companies in America that are involved in gas or in production of oil and gas. They will become the ones that will benefit because of the agreement, especially the gas company, because of the agreement that was just signed by Joe Biden and the EU, that America companies will begin to provide gas for some of these European nations. So that's the positivity in the international market. And if you want to play that space, which companies you will be looking at, we'll be looking mostly at companies that are involved in gas production. So for the locals here, especially Nigeria or as well African investors, it will be very, very difficult for them. Then they have to cope again if they are getting that fund from here in Nigeria or in any African country. That means they're getting at a higher cost. They have to deal with the inflationary figure, which in all African economy have gone double digit also. So they will begin to look at returns of about 30 to 20%. And you shouldn't forget the volatility of the exchange rate. And not only in Nigeria, the only African country that seems to enjoy a little bit stability in their exchange rate, but they will lose this, but it's not as high as some of them is South African. And because of the diversification of most of their sectors and their tourism sector that just started attracting visitors after the COVID lockdown. So it's a major challenge for Africans, especially because most of our funds are short-term funds. But then you see opportunities also, like I said, in the oil and gas companies that are listed in America. So you could see opportunity there. You could see also opportunity in the security companies also, because most of the developed countries are beginning to support the fight in Russia by providing them with ammunition and weapons. So it depends on in a war situation. Sometimes some companies gain better than some companies, but the service sector, the service company are going to be the worst hit, especially most of them that make some profit from Russia, that are withdrawing their product from Russian market. And also not forget that also it will affect the commodity market, especially in Europe, because Ukraine happened to be one of the food basket of European nations. So now that they have this crisis, it will be difficult for them to sustain themselves, especially in the area of food. So in the area of food security. So it's a huge challenge. And so if you have any companies that depend on Ukraine for supply of goods for production, then those companies also will begin to face challenge in terms of shortfall.
Right there, spot on. Now, with the increased tightening in terms of loan accessibility from the international economy, do you think we're utilizing or understand the concept of the local capital market here, especially in funding critical infrastructure projects and other economic agenda? Some say we have the likes of Infraco, but is that enough, really?
Yes, David, very well. We need to do more, but sometimes they say charity begins at home. When you look at the government themselves, and the government seems not to have so much confidence in the capital market, they have to go and do some euro bonds, trying to go out to attract, because they think about the kind of rates they get there comparable with the capital market. And the challenge again is that most governors, when a state government or federal government, when it comes to the capital market, there's a lot of regulatory work, and you must meet up with this regulatory. And the most important one is that you must pay investors as when due. And you know what, there could be policies from a sort, and some of them are not ready to bear this grunge. So they've not really taken advantage of the local capital market, because cost of funding in the local capital market might not be as cheap as the Eurobond, but again, cost of funding is cheaper than what you have in the banking sector, or you're going to borrow from financial institutions, or even so. The challenge is, do we have the government that are thinking, or the governors that are thinking out of the box to see the capital market as that vehicle that can drive economic growth in the state? Very little states have tried to access funds through the capital market. I think Lagos State is one of them. Then outside of Lagos State, we had some states that were coming, but when they look at their regulation, they were not able to meet up regulatory procedures, so they were not having access to those funds, because you must, like I said, you must make sure you pay at when due. The federal government have made use of the capital market for a long time. The Sukuk bond, also the federal government FGM bond, they do make use of the capital market. But I think when you look at the capital market in terms of the kind of use that the federal government does use them, they use them for the long-term investment, and the returns of between 15 to 20%, which is actually good when you're looking at the inflationary project. But I think they could do more, especially in the area of key projects. I don't see any reason why government shouldn't have come to the capital market to generate funds to do Lagos Ibadan. I see no reason why federal government shouldn't have come to the capital market for their railway project. And so they in turn just bring those projects as equity in the market, and then investors key into this project, and this project are able to generate funds on their own to pay investors, and government will be able to use those funds to fund other sectors, other social sectors like the health sector, like the agriculture, like the health and educational sector. It would have been a good thing if government were really thinking out of the box.
And now in the month of March, we have the MPC's commendation of the equities market performance here. But to what extent do you see now the maintaining of rates stabilize our markets?
David, we have to maintain our stance because government has to do a lot, and then government does have the fund to do those lots. And again, the earning capability of Nigerians have not gone up, and the earning power of Nigeria have not gone up, but the cost of goods and services have gone up. So government really needs to do a lot. So if you hike rates, you increase the poverty level of Nigeria, and that's why the government is not like do that. For now, it's a political move as far as I'm concerned. It's not an economic move. We are looking at how much hardship when some of these policies will be raised, how much outfits Nigerians will suffer. And so the government will really have to think. If you want to hike rate now, you look at cost of funding will go up from a fragile economy that is recovering from the pandemic. We also know that inflation and pressure we are fighting here in Nigeria is due to our over dependence on importation of most of our goods. Those are where we are facing this inflationary pressure that we are facing. So it's a huge challenge for the government, and I think they had their hands tied, and especially with the exchange rate volatility. I think what the CBN should be dealing with, if you want to really stabilize the economy, was to begin to deal with the exchange rate volatility. Like I've always said, that is a major challenge in Nigeria, the exchange rate volatility. As once we have those exchange rate volatility, we'll be able to attract investors, both portfolio and other investors that are coming for the long haul. And so, but unfortunately, because of those instability, especially the exchange rate, we cannot begin to hike, because that will make the cost of funding to go up, that will make the cost of production to go up, that will make the cost of goods and services to go up. And at the end of the day, you will not be able to use it to tame inflation. So they had to leave it the way it is now, because the inflationary rate is still going up, and we know that we still see more of it. And then they will think about the direct intervention in key sectors. And that is why, as it stands now, CBN were not able to increase the price in petroleum products because of the impact it will have on the people. Ordinarily, we should have increased the price of petroleum product, but like it's done in every developed economy, when there are issues like this, government begin to provide social needs for the people to cushion the effect. Unfortunately, our government does not have those facilities, does not have those structures that are able to deal with that.
We're wrapping up our conversation now. It's been an interesting, to say the least, interesting, volatile and erratic first quarter of the year 2021. Between January and March, we saw a whole lot of interplay. Now starting the month of April, which ushers in the second quarter of the year. What do you think will be the outlook for the equities market? Also looking at the treasury bills and bonds market, and a whole lot more. Money markets and other sectors, really.
Q2 will be huge, especially, let's see, the Q1 result will soon be tripping in. Remember that we are enjoying the euphoria of the end of the year, where some companies have been able to give dividends, and so we're seeing investors smiling to the bank, and so, but Q2 will be huge, because we will see the impact of most of these things that we just talked about, especially the Russian-Ukrainian crisis, the inflationary rate, the cost of diesel, and the cost of production. All these, we are going to see those impact on those numbers when they come up in the second quarter. Even in the first quarter, we might see them, but it will not be as much as what we will see in the second quarter. So it could open an average of opportunities for the long-term growth of the capital market, and it could for the short-term player, it could be difficult. In the bond market, we expect it to continue the way it is, but whether it will be very liquid, we all depend on, the bond market practically is being patronized mostly by the government and not necessarily other smaller companies or companies that are looking at growth. For the treasury bill space, I don't think we see any increment, especially with the type of policy from CBN. Remember, that space mostly was played by banks, but unfortunately, they won't be playing that space that much again. So going forward, we'll see a lot of changes, but I just hope that the capital market will benefit from those changes in the second quarter. But it's left for after the first quarter result, we'll begin to see those numbers.
Thank you so much for your time on the show. It's been a pleasure speaking with you, Mukhtar Mohammed.
Pleasure, David. Thank you.
But just before we go now, we hear graphic details of the selected food price watch as prepared by the National Bureau of Statistics for the month of February. And on that note, it's a wrap on this edition of Business Week. Many thanks for watching so far. Do enjoy the rest of your weekend. I'm David Alabi. Bye for now.